This conversation was sponsored by Komodo, a zero-knowledge peer-to-peer atomic swap exchange. Learn more at komodoplatform.com. How's it going, everybody? This is Juansgalt with Crypto TV. I'm joined by Mike Lorrey. He's a crypto tech entrepreneur. He's been in the cryptocurrency space since before Bitcoin started. He's one of the few rare cyberpunks that are pretty far back. How's it going, man?
Great. Thanks for having me.
Yeah, thank you for having me at the Fourth Block. We had an event here to kind of warm up for the conference, and the Fourth Block conference has been moved to 1st of March or the beginning of March. Beginning of April.
Yep.
Right on April. And so, yeah, we've met some great people here in New York. We'll talk more about that a little bit later. Mike, how did you end up getting into crypto?
Well, in the 90s, I was with this think tank in California called the Xrp Institute. It was one of the organizations that basically people developed all the ideas of what we now call the technological singularity and the transhumanist movement and all that. And that's where I met Nick Szabo and Hal Finney and Ralph Merkel and Wei Dai and all these other guys on the Xrp Institute list. There was the transhumanist list, there was the Cypherpunks list, there was Church of Virus, a number of email lists that everybody seemed to all be involved in, and we had a lot of great discussions then about, all kinds of issues about the internet as it was, how it could be, what are the problems that are particularly with digital currencies of the 1990s, and that's how things kind of led into developing the ideas that eventually became what we called BitGold and then evolved into Bitcoin.
Fantastic. You were also in the Air Force, right? How did you go from being in the Air Force to being a crypto economics engineer?
Well, I studied mechanical engineering at Worcester Polytech, and then I broke my back in a skiing accident and had to drop out. And when I recovered, I enlisted in the Air Force. And so I spent 3 years in the Air Force and then got out at the end of the Cold War with Bush's peace dividend right before the first Gulf War. And I became an entrepreneur in Seattle. And so I was doing a lot of tech innovation there, first in energy conservation and lighting technologies. And from there, I just kind of gravitated towards the transhumanist movement and joined the Xrp Institute from that and met all these other people from all over, but a lot from Silicon Valley, from elsewhere in the country and around the world. It was really interesting to meet all these people, to talk with them online about all these different kinds of issues and develop ideas for fixing problems in the early internet, for developing solutions and how things would evolve into the future.
All right. And then something happened before Bitcoin, but after you guys had discussed a lot of these sort of crypto economics ideas, or eGold was happening, and then you went to work in OpenSim or in Sim.
Yeah, so there was, in the 90s, there were digital currencies like DigiCash and eGold and so forth. And there was also an independent sound currency called, that Norfed was putting out, silver dollars from Bernard von Nothhaus's organization. And so people were trying all different ways of creating independent currencies. And they were falling into different traps. So like DigiCash fell into a fiat trap where they were over-issuing beyond what their depositors are putting in just to pay their bills, and so it devalued the value of their currency. eGold and some others wound up either getting their servers seized or their gold seized. The government would come in and say, well, we're going to hold on to this metal because someone may be using your system for money laundering or drug smuggling or whatever, the usual excuses we hear a lot from governments with regard to crypto. And so we realized that having metal sitting around was a point source security risk. So we were thinking about, how could you mathematically simulate the monetary behavior of sound money without actually having metal sitting around or in people's pockets. And so that was really the origin of ideas like proof of work, of making something that's a scarce digital good through a process of unforgeable costliness. So the idea is that gold and silver get their value from capital and labor invested in the past. that appreciates into the future, into the present, and that's why it's deflationary macroeconomically, whereas fiat money is inflationary because it represents debt in the future that's paid off then and depreciates in value backward in time into the present, and that's what creates the inflationary pressure. So if we figured that if we had a computationally expensive process to generate coins, that it would simulate this behavior of gold and silver. And so then it was, at the time, a lot of us were using things like SETI at home to do these massive distributed data processing tricks. And there was Folding at Home and some other projects that were doing similar things. And we thought, if you had a massively distributed network of people doing computationally intensive work to prove the validity of these coins, then that would be something where it would be more expensive to fake it than to do it honestly, but still it would be expensive to do it honestly, so you have an intrinsic value to that scarce digital good. And that was really the basis for what came. And so all our ideas that were put together by Nick Szabo in his essays titled about BitGold. That was the working name that we had back then. And that the last time he essayed about that was in 2005. And shortly after that, I got into VR. And I was one of the top developers in Second Life.
When you say developers, you mean like it's like construction developers inside of SimCity or Second Life.
Not working for Linden Lab, which created Second Life per se, because most of the content in Second Life is created by the users. And so, I grew up to 53 simulated regions. I was subletting and renting out to thousands of customers, and we were, building all kinds of virtual content for them. I created the first virtual stock exchanges, and so we capitalized a whole lot of other people's businesses in the virtual economy. And we were doing anywhere between $250,000 to $500,000 USD in volume each year. And so it was, really a significant business. And we were involved in all sorts of areas of the virtual economy. And Linden Lab had started to restrict different economic activities. Like first they banned the virtual casinos, and all of the casino owners drained their funds out of the virtual banks and left Second Life, and that cratered the economy. And then because they drained the reserves of the bank, the banks had a banking crisis, and this was like a year before the real life banking crisis. And so a lot of people think that the whole thing was engineered because Second Life had been financed by a firm called XL Partners, which people believe is a VC fund fronted by the CIA. And they thought that they were essentially experimenting on the SL economy to study how a banking collapse would impact the economy and so forth. And then they started banning people from advertising within the simulated environment. And we were always protesting against these sort of restrictions because SL is supposed to be really a free market economy and without regulations. And so they're using their game god powers to really change the terms of service without people's consent. And you could either, if you logged in and they changed the terms of service, if you didn't consent, they would nix your account, which is not really a valid way. It's called an adhesion contract, where you don't have a choice over it. And
it's kind of totalitarian, right? Like
yeah, and it's actually against standard contract law. But this is something where in California they actually have a loophole for online services where they can use adhesion contracts against people, and there's been a number of cases where people in other states have successfully fought against this. But it's still something that a lot of these companies utilize as part of their whole walled garden business model.
Yeah, and it's a fascinating question. I've had personally a variety of issues with forum administrators in various forums, where, you know, maybe I start sort of hitting some of the sacred cows, right? Yeah. And then they just hit you with a banhammer, and there's no kind of due process, there's no respect for, like, you know, free speech. And there's certain areas of free speech that are certainly grayer, right? When you're sort of like trying to spam, or you're making threats or stuff like that, right? There's certain gray areas that are acceptable, but when you're civil and you debate, for example, you know, then you're just being an asshole. And yeah, okay, it's private property, you can certainly make an argument like that, but it's also, you're still violating like a fundamental sort of due process rule, etc.
And what this walled garden model that we've become used to with the internet only dates back to the 1990s with the Cyber Promotions versus AOL case. Before that, the law of the land in the U.S. was Marsh versus Alabama, which was a 1946 case where the Supreme Court ruled that you don't lose your constitutional rights when you're in a company-owned town. And in that case, there were people handing out religious pamphlets, and the company sheriff arrested them on the sidewalk of this town in Alabama, and they sued for their free speech rights, and the court sided with the people handing out the pamphlets. And so that was the law of the land until AOL came along, and half of the traffic in AOL had become spam, and they needed a way to deal with it, and so they were just banning spammers. And the spammers sued under Marsh versus Alabama, and the courts ruled that an online bulletin board isn't enough like a real-life community to justify that protection under Marsh. And so my argument is that virtual reality, virtual worlds where you have a more robust and fully featured economy and community and social structure is a lot more like a real community than like a bulletin board. Mm-hmm. And so we're fighting against Linden Lab, had protests in the virtual world, and eventually got to the point where we had been doing some business with a university that they didn't like, and they wound up just seizing all of our assets, banning my accounts, taking all our money, our simulators, our content. And so we wound up in litigation with them for several years. And then we settled in 2014, and we used the proceeds to launch Galactic Systems. And from that and the lessons of the experience dealing with them, eventually developed the business plan that we have for Galactic Systems.
Let's talk about Galactic Systems. What is that?
Well, originally the idea was I was going to create a whole new virtual world platform where we were just going to treat people better like they had rights. We were going to have an avatar bill of rights, and we were going to have better physics and better graphics and simulate an entire galaxy of worlds and so forth. But we were, funding it, we were developing our prototypes, and we were developing our Galacticoin blockchain to be the economic backbone for the system for handling all sorts of asynchronous data, whether not just cryptocurrency, but the smart contracts for 3D content licenses, for dispute resolutions, for virtual land and group registrations and memberships, and all sorts of things where you're dealing with administrative issues of contractual relationships between people that can be easily turned into smart contracts. And then we basically, the angel who was going to back our ICO pulled out on us, and we ran out of capital. And so I took a year off and studied the market and really looked at, why wasn't VR getting more acceptance more widely? And really the problem wasn't the clunky headsets, or it wasn't, the nausea from the headsets or just how you looked with them. It was really the business model, this walled garden model, where the corporations online take control of your identity, your ability to exist in the environment, your money, your content, and police you on, what you say to people. And, that's really anathema to everything we know about the basis of a civil society where individual rights are the core of all authority, where, we're only governed by our own consent. And if we don't consent, we shouldn't be tread on, have our liberties confiscated. And so I started figuring out technologies to deal with that walled garden problem. And at the time I was working in a platform called OpenSim, which is an open source version of Second Life. You use the same viewer to access OpenSim as you do Second Life, but when you're logged in to OpenSim, even though you can talk to anybody on any other OpenSim grid, you can't talk to people in Second Life because Linden Lab refused to join what we call the hypergrid. They have kept Second Life a closed grid with the walled garden model. And so I wanted to talk to friends in Second Life without having to use Skype or TeamSpeak. So I created this device called the Grid Phone. And it's essentially a virtual smartphone. It lets you talk as one avatar with a heads-up display to others in other virtual reality platforms. And, developing that, I saw, there's commercial potential. A lot of people credit the fax machine with helping to destroy the Soviet Union because it enabled dissidents to send out what they called samizdat newsletters across the Soviet Union of what was really going on and sending that info to the West so that reporters could see what was really going on and not just the government propaganda machine. And so I figured the grid phone could do the same in the metaverse. And then we brought back into play our Galactic blockchain, and so we've been merging the two technologies so that you can take back control of your identity. You can register all your different accounts and different platforms with an identity you create on the blockchain. And then you have your Galactic cryptocurrency that you'll be able to trade for game money, for fiat, for other crypto. And then we have the 3D content smart contract licenses so that creators can register their content on the blockchain. They'll be able to sell it through our 3D content store on many platforms, so they have a bigger market. With a bigger market, they can charge a lower price whilst having stronger protection of their content through the smart contract than they would with the digital rights management that's in most of these platforms.
Can you explain that a little bit? Like, elaborate on that conflict a little bit more?
Well,
or that
digital rights management in a lot of platforms is pretty basic. Like in Second Life, if you create content and you want to sell it or give it away, you can have three choices for permissions you can give the next owner. You can allow them to copy it, you can allow them to modify it, and you can allow them to transfer it to others. And that's pretty limited. That's not really a full-fledged license like we see with the GPL license and MIT licenses or copyleft, etc., which are have a lot more detail to them, a lot more different use cases where you can do certain things commercially in one way but not in another. And so we wanted to create smart contracts that are more like real-life software user licenses, so that it becomes essentially a private copyright system. So we don't rely on government to enforce copyright. The blockchain does. So if let's say you create a virtual sports car and you're selling it through our content store, and somebody in a game sees your car that someone bought, and they use what's called GL Intercept or some other app to rip that content. And then they may try to upload it to the Galactic blockchain and claim it as their own. Well, in the registration process to upload their hashes to the blockchain, you're going to have heuristics that are going to look at, for instance, the mesh pattern of the 3D model. It'll look at the byte count and other patterns in the textures used. It'll look at the byte count of the scripts that provide the functionality. And there's other heuristics we can create that look for these sort of patterns, these fingerprints. And it'll say, this car matches this contract in this block. Do you want to pay them a royalty or decline this upload? And so that way, if someone tries to rip and upload it, they're automatically getting brought back into paying the real creator for the right to use that. And it'll automatically either limit their ability to copy and distribute that, or if they do distribute it, that will include royalties going back to the original creator. So it's like any sort of smart contract, it's a self-regulating, self-enforcing system where you don't need the government to use thugs to enforce some law, because the smart contract is enforcing itself.
Right. So we have some standards for verifying the property rights claims, like the
Right.
origination of the material within the people that run the sort of the software nodes
Right.
of this blockchain, right? And have some software for that. That's very cool. It's sort of like Ethereum's processing of the smart contracts that people sort of, on
Right.
their computers they run that, right?
Yeah, and so we're not as fully fleshed out as Ethereum, where because we don't want people to create any sort of smart contract. We are creating limited. You can have different sorts of licenses based on recognized types of software licenses. You can. And we're going to be adding more features like dispute resolution and so forth over time to provide community governance. But the smart contract for the 3D content is really the first thing that we'll be providing as a service, because it's really the most important for these worlds where basically a lot of the disputes come over, content creators' property getting stolen, people being accused wrongly of stealing content that may just be similar. And so by having this system built in there, it can eliminate a lot of that drama.
That's a fascinating kind of political and property rights area to explore, and I'm really looking forward to seeing that being developed. I think it's really cool the way that you guys are implementing it. Is there going to be like a parallel processing of the sort of data that people are uploading, or is there going to be kind of like a proprietary sort of site that's doing it? How are you guys organizing that, sort of the vetting of the uploads and stuff like that?
The wallet is your passport. It's also your means of uploading and registering content, and the grid phone itself provides the access to the 3D content store that will then you can shop and have content delivered to any avatar account on any platform that we can provide the service to.
Mm-hmm. So. Okay. And how just like we don't have to go into too much detail, but who is doing the vetting of the uploaded content? Like where is that processing happening?
It's the software itself is
locally.
Yeah.
Oh, okay, nice.
Yeah.
Right on.
So it'll scan for different patterns, and it'll compare in the blockchain for existing patterns that are already registered.
Ah, interesting. Right. So it just won't register anything that looks enough like it.
Right.
Thing. Nice. That's awesome. Wow. Okay. So what's keeping game developers, game gods, from simply booting you off their games?
Well, a lot of the platforms allow user created content, and so as long as a platform allows that, we can the grid phone is user created content. We can go in there and distribute the grid phone as just like any other user, and they can't. As long as we're using the standard functionality provided by their platform under their own terms of service, if they were to block us from using that, they'd be violating their own terms of service, and that would be actionable.
And they'd be also blocking a particular API call and other sort of
right.
functions.
So for them to really block everyone in their platform from using a grid phone, they would have to turn off that script functionality for everyone, and that would reduce the value of their platform to their whole user base. Not just to us individually.
Mm-hmm. I think that's the most brilliant aspect of the whole thing. It's like a network marketing, almost like a Sybil attack.
Yeah, because we're giving out the grid phone itself for free. And when you have a grid phone, you can give a free copy to everyone else on any other platform. And it's because it's ad supported. If you want to get rid of the ads, you buy a subscription, and there's all kinds of monetization models we have for it. But we want everybody to be able to use the basic freemium model for free to be able to communicate, because that's really our mission, is to tear down those walled garden models. And so with that ability to give out copies, then it becomes a viral sort of transmission of the content throughout a whole user base, and it'll spread faster than they can really block it. And they would have to try to claim that our service was somehow griefing their network, And it's like, well, no, all of our communications are HTTP calls that are outside your network. They're going using our network that's just interfacing with the users at their viewer. And so they would have to turn off that functionality in the user viewer, make the system not usable for the viewers, and that's really harming them more than it harms us.
Mm-hmm. Yeah, that's delicious in a sense. From a strategy perspective, it's great. It's fantastic. So what happens if they sue you? If you, as a company, and there is a corporate structure that you guys have, and then people that are publicly working here.
Yeah, we're a C corp in Delaware. We are organizing as a to issue a SEC compliant ICO. We're fully compliant with all regs and laws and so forth. So we're not just some fly-by-night bunch. And if these companies try to litigate against us for having our own, contractual relations with their users, then that becomes something where we can say, we're in the right here. You're violating your own terms of service, not just against us, but against every one of your users. And that becomes a class action of their entire user base against them, not against us. And at the same time, we can say, this is the time where the courts will need to say that a virtual reality is more like real life than like a bulletin board. And that would bring Marsh versus Alabama back into force as a legal basis for creating an open metaverse and tearing down that walled garden model.
I expect there's going to be a lot of support, a lot of people that are going to be paying very close attention to that kind of court ruling or court battle. I know that there's some people in the new conservative movement or alt-right or alt-light, depending on how you look at it, that have been getting banned on Twitter, banned on Facebook, and they're very, very popular people. People like Milo Yiannopoulos, which has lovers and haters on every side. He's saying that kind of political change in the United States is coming because there's a clear problem in these massive walled gardens that are sort of fundamental social structures of society now that are making rulings with dictatorial powers.
Yeah, and I would argue that
constitutional rulings that
these social networks really I'm not a fan of utilities law per se, but the fact is that Twitter and Facebook and these other social networks are utilities because they are a common carrier. They're used, even though, yes, it's their private network, but Verizon's network is their private network. But legally, Verizon cannot refuse me service because of my political opinions. Mm-hmm. They can't do that to you because if that were the case, then you would have seen communists in the 50s refuse to be able to have a phone to communicate with each other. And that would never have flown in the courts then. Mm-hmm. Because, our, rights of conscience and freedom of speech are sacrosanct. And so these Twitter and Facebook need to be brought into that same legal regime where, sure, it's their network. And sure, they have a right to police against actual illegal activity. But having an unpopular opinion is not an illegal activity. And as long as that's a company-owned network, it's a company-owned community, then you're dealing with Marsh versus Alabama. And people don't lose their basic rights when they're in a company-owned community.
Yeah, and I can already hear some of the anarcho-capitalists, like maybe the new brand of anarcho-capitalists saying, oh, that's statist, you're going to be using the state for your own benefits, and I just want to kind of like address that real quick. That this is what when we talk about sometimes when I talk about Facebook on spirituality or when people talk about values, right, or what's important in the world, like free speech and the ability to sort of maintain your individual rights within a given ecosystem. These are bars that we can aim for. Right? We need to defend. We need to fight for. And
if you go by those anarcho-capitalist definitions of private property, then really you only have rights when you're on your own private property.
Yeah.
Because in an anarcho-capitalist society, there will be no public property. There'll be no public rights of way. There'll be no, public forum. So the idea of free speech in the society they're talking about, either you have free speech everywhere or you really only have it in the privacy of your own room.
Yeah.
You know?
Yeah, and it's a fascinating thing about this whole debate is that currently, maybe in the future in a free society, right, we can speculate about how things would work. But in the current society, we can argue that, the domain that, that the court system and that, where the legal battles happen is a kind of public domain. It's sort of like being in the wilderness and we're sort of fighting to tame, different things or
Right.
fighting to capture or domesticate certain parts of this social wilderness. And that's the battle, right? Like there's a lion over there and you're the tiger and you're fighting for a thing. But the conflict plays out in the courts and it plays out in civil discourse. And if it doesn't function at civil discourse, it escalates
Right.
to violence or
And
domination.
if we're not free to have a civil discussion about, our disputes, what we disagree about, then what's the point of having any system of justice whatsoever? Because that's what justice is about, is talking out our differences while tolerating those differences and coming to an agreement as to who's in the right, who's in the wrong, and how we're supposed to get along together. And if you can't have a civil discussion, then there is no such thing as society or civilization. And so if you can't tolerate people on your property saying what they believe, then you really don't have much courage in your own convictions.
And you're thus not very civilized
Yes.
in your kind of individual spiritual integrity or
Your
whatever. Right?
beliefs,
Like
if you have strong beliefs, you should believe that they're valid enough that they can survive somebody else disagreeing with you about them. And so this whole modern thing of the snowflakes, the fragile opinion syndrome, the inability to tolerate differing opinions, is just it's mind-boggling that this sort of thing. I mean, that's one thing we shouldn't tolerate in our society, is this sort of intolerance of differing opinions. Like, even if your opinion is objectionable to me, and I may disagree with you, and I may not personally do business with or associate with you, there's a difference between that and trying to shut you out of society. And the more time that we spend online, and the more of our lives, our economic lives, earning a living comes from being online, then it's a matter of life and death. If your living is made online and then some company suddenly shuts you off from your economic lifeline just because of something you said, and you're not their employee, that's a serious wrong. And I don't care if it's their network. If they're making their network available to the public, that's essentially a public accommodation. They shouldn't be able to make a judgment as to who can say what. And because it's publicly open, if they want to have it regulated, it needs to be much more closed. Okay, you need to, for instance, vet who's allowed in the network. Not, if I can go in there and create a username and a password, that's not a vetting process. Even though it's a login, it's not a vetting process because anybody can make any account there. So they're not checking IDs, they're not verifying IDs, they're not determining whether it's, I'm someone that belongs to their society or a group or club. Okay, so there's a difference. For instance, if we go, let's say, to public accommodations law, which a lot of libertarians hate as well, is that, if your door's open that anybody in the public can walk into because you're trying to get additional customers to come in without appointment, without making reservations, you're basically... It's an invitation. It's an invitation. I call it impersonating the public square. It's like if you go to a lot of public restaurants and so forth, particularly when the weather's warmer, they'll have tables and chairs on the outside of the building. Okay, is that their restaurant outside on the sidewalk with the tables, or is that the public domain? If it's public property and they are allowed to have the tables and chairs there, can you sit there and say whatever you want because it's a public right of way? Or can they eject you from the public property because they don't like what you're saying? Okay? And if the line between those public areas and their actual establishment is blurred because the doors are wide open and anybody can walk in and out with without any vetting, no appointments made, no reservations, no way to check and verify who they're allowing in, then you're dealing with a situation where it's essentially a pseudo public domain, and they have a duty of care and tolerance for what you're doing there. So if they don't want you in, they should have security checking everybody, keeping out people that they don't want ahead of time. You know.
So if they vet, they lose. They gain certain rights, but if they don't vet, they're losing certain rights.
Right. So this goes to, for instance, carrying firearms. Okay. A lot of businesses that are anti-gun, as more and more states allow more people to carry concealed or open weapons in public, businesses that are anti-gun will post their sign on their door saying no weapons allowed. But there's no security there to check you to see whether you're armed, no metal detector to see if you've got a concealed weapon. And so if they're telling all the law-abiding people that they can't carry a gun, and so they leave their guns in their car where they can be broken into and stolen very easily, and they're sitting unarmed in the restaurant, they're now in a gun-free zone, so they're far easier victims. And someone who just disregards the sign can come in with a weapon and shoot a bunch of people. So you have far more damage, far more death and injury. Who's responsible for that? Is the shooter the only person responsible, or is the public accommodation owner responsible for making that an area where people are more easily victimized because they're disarmed? So in public accommodations law, there's this thing called the duty of care. All right. So, for instance, if there's water on the floor, it's slippery, and someone slips and falls and is injured, the building owner or the restaurateur or store owner is responsible. They're liable for that because they did not fulfill their duty to care for the safety of the people patronizing their accommodation. The same situation, they're creating a situation where it's not safe by requiring people to be unarmed. So they have a duty of care. They have a liability for any injuries.
Right.
Okay, so if you're going to enforce these sort of rules, you have to be liable for the consequences. So similarly with public networks, if you're going to be the game god where you're governing what people can do and say and behave, then you're also liable for the consequences of that. If it damages people's public reputations, if it interferes with their ability to make their living, you're liable for those losses.
Yep. Yeah, it makes sense. There's a kind of balance in that where, if people restrict your freedoms and your rights to carry a gun, with that they're sort of gaining that responsibility to protect you, right? Because there's a particular intent and function to that.
I'm from New Hampshire, and in New Hampshire, I can carry a gun anywhere in the state other than courtrooms. And even when I go to court, I can bring a gun to court, and the bailiff has a gun check at the door. And I can check my gun in, they give me a ticket, and I go in.
And it's well guarded.
So they're guarding, even though everyone in the court is unarmed, they're safe because the court is assuming the responsibility of their safety. And that's really the level of duty that people should be assuming with their businesses if they're going to prohibit people from being able to defend themselves. And with other exercises of their liberty, when they confiscate those rights on the property, they're assuming a duty, a liability for their actions to look after their clients. And so if you're going to be restricting people, there's this principle that some legal scholars have developed called the God paradox with regard to particularly online networks. And the idea is that if you have no standards at all, you don't police anybody in your network, you're not responsible for anything they do. If you do police your network, you're responsible for everything everyone does, which is kind of paradoxical. But the idea is that if you're not policing people on your network, you're a common carrier. You're basically creating essentially a pseudo-public domain where people are not limited in how they can access and behave and interact with each other. And they're each responsible for their own protection, but also for their own behavior. If you use that illegally, if you're on the phone and you're swatting people with the phone system, the phone company's not responsible for the consequences of your swatting somebody. You're responsible.
That's fascinating. Has that principle been tested in law in the United States?
There's some cases about that. I can't name them offhand, but it's one of these areas where you're dealing with different legal communities in different states. So you'll have states like New Hampshire, which has a much more libertarian legal tradition, that will say, this is more a matter of a God paradox where people should be free to do what they want. And then you have states like California, New York, where it's much more of a nanny state, and they say you have to police your user base and so forth. And so this is an area of conflict between the different states, and it's something that may eventually get worked out through the federal courts.
That's fascinating. Yeah, so I think that's an interesting way that we've sort of delineated kind of the importance of freedom of speech and how conflicts end up being resolved in society if civil discussion doesn't function well enough. But the point of free speech and this kind of principles is sort of to be able to try to prevent that, because either way, if it doesn't get resolved at the civil level, it's going to escalate at further levels, right? And there's a kind of wisdom, without, there's plenty of ways to criticize a lot of the ways that justice systems work in society, and some countries definitely do it way worse than others. But there is a kind of wisdom in the way that that the courts that you gave us an example of have structured their environment.
Right.
And so that's kind of an interesting thing. But
so that's what we're doing. That's our main project at Galactic
fantastic.
System, is using this grid phone and Galactic Coin technology to challenge the existing business models, to disrupt them, and to create an open metaverse. Because as VR and augmented reality and mixed reality become a bigger part of our lives, we're going to spend more time there. It's a lot more important to have these sort of legal issues settled, so that more and more of who we are doesn't become captured by the corporations. We're not customers, as users, we're really products by this sort of capture that they've done of our identities. And so by what we're doing with the grid phone and Galactic Coin is allowing you to take back control of your identity. You're no longer a product that they can sell to advertisers and so on and so forth. You're a user that they are responsible for, and they are responsible too. And so we're able to use these technologies to create an open metaverse. And that's really our idea, is that we can achieve a vast social good while still being a profitable company innovating with these technologies.
That's going to be a fascinating battle to see, and you guys are prepared to end up in a court case. In fact, this is sort of
investors don't like to hear that part of your business plan is to go to court, because court cases cost a whole lot of money and take a whole lot of years. But we expect that one or two different platforms may try to challenge it, and that may be a court battle we'd be dealing with. But there's going to be so many different platforms out there that we'll be making more money uniting these networks together through network effects, building the value of our company, that will way more than overcompensate for whatever the costs of whatever litigation we wind up. And every company winds up in various types of litigation for various reasons, because particularly if they're disruptive, because obviously people who have an existing property or money interest are not going to be happy that what their existing means of doing business is being disrupted. So it's something that's inevitable, but we shouldn't treat it as something where it's an inevitable battle that's good.
Right. Yeah.
But our goal is to really, if they're smart, they won't make it a legal battle, because really, from our analysis, every one of these platforms can become more valuable by being part of the grid phone network than they can by remaining in the walled garden business model.
Yeah. So what is the business model of Galactic Coin and grid phone, and what's in it for these game walled gardens and for the game gods to collaborate with the Galactic
So
Coin?
I talked about the freemium model for the grid phone, and you can get rid of the ads with a subscription. The media screen on the grid phone has and you can access our servers to shop at our app store. Developers can create apps to sell on our app store or give them away, in-app purchases, the whole smartphone business model. And then our 3D content store, and so we get a commission on 3D content. So that's our monetization. The blockchain, the Galactic Coin blockchain, which is derived from Peercoin, so as proof of stake, we've also implemented what we call proof of participation. So we don't want the mining to be dominated by huge data centers in China. We want, for you to be able to mine Galactic Coin, you have to be logged into one of the platforms we're providing service to. And so, just like mining gold in World of Warcraft, you can mine Galactic Coin in Second Life or OpenSim, or when we go into High Fidelity and Unity 3D with your avatar, and then we can encourage the platform owners and we'll say to them, you can become a supernode to channel what's going on with your users using our service, and so you get a chunk of those earnings for enabling your users to relay data on what land they're mining on, who owns it, so the landowner in the virtual environment can get a chunk of that if they want to. And as a supernode owner, they'll be earning money from the whole Galactic Coin ecosystem. And so that will encourage them to be open participants in what we're doing, and therefore disincentivizes the whole maintaining the whole walled garden model.
Yeah, that's fascinating. I think that's a very interesting deal, and they're gonna have some great indoor conversations about how to deal with Galactic Coin as it moves forward.
Yeah, there are some platforms out there that are talking about doing blockchains already. I know Philip Rosedale of High Fidelity has been developing a blockchain concept for High Fidelity. There's debates between him and some people in OpenSim over what's the scalability, the capacity of blockchain to handle the number of different asset calls that are typical in virtual worlds and virtual realities from asset servers. And so there's arguments that it can't scale, it can scale, it depends on what algorithm you're using and so forth. So these are debates that are currently going on within the community, and it's a healthy debate, because it's encouraging people to look at some of the more innovative ideas in the whole blockchain space, because everybody in blockchain, of course, is dealing with scaling issues. Mm-hmm. So so VR is no different from that. And so it's going to encourage more innovation. And if we can get to a point where all of the different platforms create their own native blockchains for their own inherent asset systems, then we can treat those as side chains to Galactic Coin, so that then they can interact with each other and that will really open up the metaverse from an economic perspective.
Fascinating. How are you going to deal with the token, the crypto economics of it? Do you have one token, two tokens? How does that work?
The Galactic coin has a single utility token called the Galactic coin, and so that's essentially the monetary unit of the blockchain. And so that's very simple in that respect. With our ICO, we're going to be doing a crowd sale of Galactic coins that have less than 1% that are going to be pre-mined. But on the other side, we're doing an ERC20 equity token on the Ethereum blockchain for people who are accredited investors in the U.S. or others outside the country to actually invest in equity in Galactic systems, because I've tended to be critical of the whole crowdfunding movement. I know it's very popular with millennials. People believe in this sharing society thing, but it's like, if I'm really gonna, if you're gonna share your capital with me, I should share my equity with you. That's a fair trade to me. I find it weird that you see a lot of these crowdfunding campaigns where you have companies that are getting people to donate money to create products that are profit making for the company. It's like, if you're going to give me money so I can earn a profit, so I can buy a Lambo or whatever, I want you to have a piece of the action. That's, to me, ethical. If I want charity, I should be operating as a nonprofit. So it's very weird. Maybe it's just because I'm an old guy, but if you're going to use a sharing economy claim, it's like, yeah, sure, share your capital with me, I'll share my equity with you. That's a fair trade, and I think that's really where things should be going in crowdfunding in general. And that's another big issue with SEC rules and like the Jobs Act that limit the amount that you can raise through crowdfunding if you're offering equity in your company, and that's obviously impacts ICOs in how much you can raise if you're going to do an equity token without falling under SEC Regulation D. So there's all kinds of regulatory snarls that you've got to deal with in that, and so we've been weeding our way through that, and so we chose to do a completely SEC compliant equity token for part of the ICO, and then the other part is the crowd sale of the utility tokens.
Cool. Any rough ETAs on development and
Well, the core code of GridPhone is developed. It's in testing in Second Life and OpenSim. We're getting ready to do the beta release, and the Galactic Coin blockchain is developed. We're implementing smart contract capabilities into it right now. And then once those are both complete, we'll be merging those into the marketplace. And that will then become, we'll be doing limited beta of the GridPhone. And then once we start doing this merging of the technologies, then we'll be releasing the full system to the public. And so we're going to be launching the ICO this month. And once that's complete, we'll be releasing the beta, and we'll be then expanding from Second Life and OpenSim out into High Fidelity and Unity 3D and Unreal and other engines and platforms that any place where we can put either user-created content or third-party mods and plugins, we're going to have GridPhones there. And then once we've entered all those platforms, then we're going to deal with the games and other platforms that don't allow any sort of outside content, and then we're going to deal with those guys and say, listen, you guys can join the open metaverse, or we're just going to inject our stuff anyways. And they may not like that, but people that know me know that I've been involved in liberty activism for quite a long time, and I'll find all kinds of ways to get the liberty message out to people. And just like it was a crime to give a cell phone to someone in the Soviet Union in the 80s, they may make it a crime for me to give a grid phone to somebody inside their game, but that's not going to stop me from doing it.
Right on. Well, it's very exciting. I think it's one of the more fascinating projects that I've heard of. And for the record, and this I'm one of the kind of early investors in the equity side of things. I have a very small position. And when I interview people, people know me because I interview people that are doing things that I think are cool and have good potential. So I'm excited for that journey. I think it's going to be great. I'm looking forward to being, having some role in that, whatever that is.
It's been great, getting to know you better. For me, I've, heard before we really touched base about this project, you were somebody that, we were Facebook friends, and I had been following your podcast for years, and so it was great to get in touch with you and talk about what we're doing, and you've been really invaluable with helping me to contact a lot more of the newer parts of the crypto community, and both in the investor side, the whether they're holders or traders, as well as in the development side. So it's been really helpful to have you on the team as an early investor, and encouraging other investors to participate with us.
Yeah, I'm happy to have had a part to do with that. It's been fun. All right, I have one quick comment on the proof of participation stuff. I think it'd be kind of fascinating. I have no idea how you guys are doing it, but I think it'd be kind of fascinating to create this proof of participation kind of metrics relative to the sort of status and reputation kind of game metrics that the games themselves develop, because they already have sort of hierarchies of status. So why not just create mirrors to that and have that be part of the mining process?
Oh yeah, we can easily say, these are the most popular games among miners. How many people are mining versus playing in these different games? How much time are they spending there? How much Galactic coin they're generating, and so forth, versus the actual transactional economic activity for 3D content and so forth. So there's going to be all kinds of metrics we'll be able to analyze and publish from that.
Yeah, and the games are already heavily invested in making sure that those competitive standards within the games are optimized. And that they're
and
not
a lot
hard
of
to
them
exploit.
Misrepresent their data.
Oh yeah.
Oh yes.
Okay.
So, having independent data from users that are using our service would be a great way to have better market information for consumers to, really know what's the more popular games, what people are doing in those games, and so forth.
Cool. Very interesting. All right, so that's great phone. Let's talk a little bit about some of these internal crypto debates. You mentioned that Galactic coin, your cryptocurrency sort of project, is going to be a pure coin fork that uses proof of stake. How do you think about this proof of work versus proof of stake debate?
Because I was involved in BitGold back in the day, I've always been a big fan of it. And for a number of years, I always thought that proof of stake was just some socialist scheme but once I spent time and learned more about how it's a valid consensus method. I've actually kind of reached the belief that it may be actually more enforcing towards the establishment, because particularly networks that have large stake requirements, like Dash. Now I have to admit that I co-host Free Talk Live once a week, and Free Talk Live is sponsored by Dash. So Dash guys, please don't take it out on Free Talk Live that I'm saying this, but needing 1,000 Dash to be a masternode on the Dash network, when Dash is trading at $800 or whatever, that's a huge investment, and that's a huge barrier to people becoming Dash masternodes. And so you wind up creating a new aristocracy, a crypto aristocracy. And so, granted, people who are early adopters who take early risks should see a reward from that. But
Absolutely.
should it be something where they're able to then, because of the growth of the network, because of the growth of the value of the coin, then exclude others from the upward mobility within that ecosystem? And so, should it be that hard to be a master node operator?
It's way too hard, and I agree with you. It's a very big barrier. I remember them talking about creating a sort of implementing a smaller sort of collateral requirements for that, so that more people can become master nodes. This has been talked about for a while. I'm not sure where that is in the development roadmap or what they're thinking about right now, and we'll have to see what they talk about in its first evolution fork, which is coming up this year. But yeah, it is. That's one of the common critiques of proof of stake systems, and Dash is a kind of proof of stake system. It's kind of a merged system where you have proof of work base layer and they have proof of stake for the masternode system. The critique is that it tends towards creating a kind of oligopoly or something like that.
Right.
Because there's a kind of rent-seeking, right? It's a kind of rent-seeking thing where you have you have a piece of stake, nobody can take it from you, and you're collecting constantly more revenue, which you can keep adding to that stake.
Right.
I think that one of the counter arguments to that would be that to create an inflationary cryptocurrency with a not with a predictable inflation, but that it's sort of it's not necessarily.
The gold bug in me. Oh,
I know, it hurts.
That has that's an idea, and there's other possible ways to go about it. I'm kind of blanking at the moment over some of the thoughts I've had about that. You could have fees to be master nodes. I was wondering a while back, it's like, why couldn't I submit an application to the Dash network for funds to become a master node?
Shit.
And why not? And then it becomes a popularity contest. Do people like me enough to donate because they think I should be a master node operator? Why not? And maybe that's something where people should be able to run to be elected to be master node operators and have the stake put up by the people voting for them.
Yeah, and it's interesting because then you're heavily invested into it, and so you have skin in the game for the benefit of Dash, right? I mean, I think Dash from a kind of design perspective is really interesting. There's people that critique it from various angles, right? And there's certainly things you can critique about it.
I really like the Dash network, and the guys people have different opinions about the guys running it, but they've done a great job administering it. And I love the system that the master node operators have for pooling funds every month to fund different projects, and whether it's charitable projects or marketing and promoting Dash or investing in other startups, they've done some really fantastic things. One, as I mentioned, they sponsor Free Talk Live, which I co-host. They just voted essentially $2.7 million worth of Dash to fund Ben Swann's Truth and Media to come back on the air. That's which huge. Ben's a friend of mine. The guys on his team are friends of mine, and I was really disappointed when he was forced to take his sites off the air by CBS. And so I'm very happy that Dash has been able to step up the Dash network. You guys are awesome for doing that. Believe me, you'll have my gratitude forever. And I'm sure there's a lot of other libertarians that feel likewise who are huge Ben Swann fans. And those are some of the great things that those sort of functions in the Dash network that I would encourage other crypto networks that should adopt, because you can still make a really good profit as a node operator, but still utilize your power in that network to do some really awesomely cool things, whether they're profitable for others, whether they're socially beneficial and have an impact outside of profit, beyond just promoting your your network. So it's a fantastic mechanism that they have there for that, and I would like other cryptocurrencies to implement sort of things like that.
Yeah. I think it's pretty clear that they're having a noticeable and in many ways positive impact in society with that. They're doing a lot of charity and stuff. I think that's fantastic. Just so that people don't call me or us dash chills, I'm going to point out, their anonymity is probably okay. It's probably not as good as Monero's,
and I know
it's
this
probably
big
not as good as Zcash's. Zcash, if everybody used C transactions all the time, Zcash would be better. But because it's not default, then I think Monero's has a pretty good case. Granted, Monero has like multiple input sort of ring signature strategy, so you can still do some. Well, there's people that think that you can still do some statistical analysis on that, whereas with Zcash, it's just a set-to-set sort of movement, and et cetera, et cetera. So
and Zencash is just there. That's another anonymity-based protocol that's really something that's going to make privacy a lot stronger. And it was interesting because the Zencash white paper specifically mentions voluntarism as a basis of their algorithm.
And it came out of Israel, right? Like some of the people are...
Some of them are from Israel. There's actually a guy in the Zencash team named Mike Lorrey, and our names are he has one R in his last name, and I have two.
Wow.
And people have confused us in the past. So we're different people. We're both super cool. but yeah. So... just a lot of great crypto projects doing all sorts of things like for privacy, for building the community and so forth. And it's great to see all that.
Yeah, definitely. Do you know what's special about Zencash? Isn't it also a copy of Zcash? Like Komodo's a copy of Zcash.
It's derived from Zcash, but it's like this provable anonymity that they're really building in there, and it's I haven't really delved into the protocol that much, but it's from others that I've talked to, they've been really impressed with the work that they're doing over there.
Cool. Well, I was doing some consulting for somebody, helping them set up like a Zencash wallet, and I became very somewhat disappointed with their wallet because you can't encrypt their wallet.dat file on the core client for Windows. Which to me is like, holy moly, like that is just retarded.
That seems like a major oversight, kind of like that.
And they acknowledge that it's a bug that they haven't fixed. Like, wow.
and hopefully, the Trezor wallet had a similar bug last fall, where essentially if you took the wallet and you sprayed it with Freon to freeze it, then you could do a dump of the flash and get a plain text file of the 12 words and your balances and it was just they did a firmware update that fixed those weaknesses. But it was interesting that there was that kind of a weakness, and it wasn't really to do with the Trezor itself, but the particular chip that they used in it wasn't allowing for encrypted data within the chip. So, it was encrypted as it was coming out. So
interesting.
But it's fixed now, and Trezor is the Trezor and the Ledger are my two favorite hardware wallets.
Yeah, same for me. Ledger Nano S and Trezor. Shout out to Satoshka. She's the co-founder.
You'll have to introduce me to her. I hear she's a really cool chick. So.
Yeah, she's awesome. Yeah, and Ledger Nano S has they're doing some really good work as well. Looking forward to testing the Ledger Blue whenever it comes out. I hear it hasn't been released yet.
Send me one.
Yeah. We'll do a review. All right, so taking it back, do you have any more comments of proof of stake versus proof of work, the oligopoly problem?
I think that as long as people are focused on making sure the network is as decentralized as possible, have a lot of nodes, have a lot of master nodes. Having a small number of master nodes tends towards centralization. So you should want to have as many as possible.
So lower the barrier to entry,
Yeah,
basically,
yeah.
so you can get a stake, right?
Yeah. And part of the reason for large stakes was to really protect your network against being taken over by more profit-seeking bad actors. But it's if anybody with enough money can come in and do that. So it's if your real enemy is the banking system, they're the biggest ones that could come in and buy up a network and corrupt it. So
yeah, one of the funny thing though about that is that in proof of stake, so the Fed prints $10 trillion and goes and buys a proof of stake currency. The price is gonna go to the fucking moon. Everybody's gonna be rich, right?
Yeah,
Everybody
and then
else
it'll crash.
and then it'll crash. Yeah, because everybody's gonna dump on them and then go fork it and build a new one. It's like, all right. So there's some resistance to that, which is pretty cool in proof of stake systems. Whereas in proof of work, you can just go buy a ridiculous amount of mining hardware. Of course, you have to go manufacture it, which is not a simple thing.
Right.
And there is certainly, there's limitations in how much of that is being produced. Clearly, I mean, as prices go up and stuff. But I don't know. That's always seemed to me kind of like one of those.
Well, I always wondered why. I've always heard these stories going back to the 90s, how the NSA had football-sized buildings underground filled with servers cracking cryptography. It's like, why aren't they using that on Bitcoin?
I know. Yeah. It's like people that talk about how. Well, and by the way, like if the Fed did invest a bunch of money on ASICs, right, then they would be heavily invested in the success of Bitcoin, which is interesting, right? Because if we just fork away from their algorithm, they're fucked. They just lost a ton of money.
And a lot of people have conspiracy theories about this whole thing, and I've talked to people who have actually dealt with FBI people who that will talk in public saying we need to regulate cryptocurrency, we need to ban blah 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 blah. But then you talk to them in private, and they're like, "We love blockchain because we can track every transaction everywhere." So it's like
control freaks.
They talk about, it's a great currency for drug dealers in public. They'll tell people that. Then in private, we want the drug dealers to use it. So then when we arrest the guy on the corner and grab his phone, then we can basically offer him a plea deal to give us the password to his wallet. Then we can trace every transaction up through the whole supply chain and get the kingpins, and then go out from the kingpins to all the other distributors. So really, if the feds really wanted to, they could utilize crypto to really go aggressively against the drug cartels to shut down illegal drugs if they wanted to.
Of course, according to conspiracy theories, they would end up busting the CIA anyways. So
and Pfizer, thank you.
Right, they would end up at the big pharma. So yeah, give it a shot. You might pass me the bottle of Sure. That's hilarious. All right, and is Galactic Coin going to have a masternode sort of topology, or is it proof of stake?
We're working on that. That's a project we're working on. Peercoin wasn't designed to have a masternode topology, but we're trying to build that in because we want to utilize that sort of structure to encourage platform operators to buy into it. They'll see that they can profit from the system as well. And so we really don't want to wind up in a big battle with all of these different platforms. We want to evolve the community. We want teaching them that this technology is showing them how the network effects make their own companies more valuable as a result than maintaining the walls around their networks.
Okay. Yeah, exactly. I think it makes a lot of sense, and I think you can bring the pretty good deal to them, as we discussed. Anything else you want to say on that?
Nothing. I mean, that's pretty much it for the grid phone. And we've as a company, we've kind of partly been paying our bills other than bringing in investors by consulting for other companies. And one of the other projects we're really getting more involved in now is called Octaneium, and that's involved with a company called Intermex, which is a Mexico-based petroleum commodities trading platform that they worked with the Mexican government to deregulate the Mexican oil industry. and they developed this platform, and then they realized that the infrastructure in Mexico is so antiquated in the oil industry that they really don't have any way of verifying the data being claimed about what oil's being produced where it's getting shipped, how much is being refined, so on and so forth. And there's a tremendous amount of graft and skimming and so on and so forth.
It's a very low trust. Like there's a
very
lot of
low
scamming.
trust. So it's a perfect place for a blockchain.
Perfect.
So they realized they needed a blockchain. So they came to us. And so we've developed what we're calling the Octaneium blockchain. It's a fork from Ethereum. And we're developing a limited set of smart contracts specifically for the petroleum supply chain ecosystem. And with that, where the currency in the blockchain is called Octane. And so that it'll basically be the fuel for the cryptocurrency to pay for all these different transactions, for the smart contracts, for the commodity contracts that'll be trading on the Intermex platform. But at the same time, one of the companies partnering with Intermex produces a lot of the programmable logic circuits and other sensors that are used in most countries' oil infrastructure for the valves on the wellhead, for the pumps, for refineries that are fracking, that are distilling the petroleum into the different what are called fractions, whether it's octane, gasoline, methane, so on and so forth. And so by having sensors all along that, those are all addressable IP objects in the Internet of Things. And those feed data into the Oracle programs that inform the smart contracts as to the conditions in the industry. And so then this market becomes what we call more of a true Bayesian marketplace, where there's actual real-time data informing the market what's going on in real time, at the wellhead, at the refinery, at the distribution center, at the gas pump. How many 87 octane gallons of gasoline are being put in cars today? And how versus last week versus last month, and you can use that to do futures contracts for how much are going to be, how much are people going to buy next month or in 3 or 6 months. And so then you can do all kinds of really cool financial trading that's based upon a much greater level of data that's operating in real time and not being fudged by intermediaries. And beyond that, we can do things like monetize in-ground reserves. This is a big problem in the oil industry. Is if you go and you buy a plot of land, the mineral rights to a plot of land because you think there's oil there, you may have some geologists saying we think there's so much oil here, but you really couldn't go to a regular investor and say you invest in my oil wells, because they have no idea whether you're actually going to hit oil there. And so a lot of these explorers wind up going to the big oil companies, to the huge commercial banks to get financing, and they wind up taking a big hit on that financing because of the risks involved. And what we're able to do is, by having a consensus tool for the geologists to come to an agreement on a more accurate assessment of what the in-ground reserves are, then we can package that as a security that can be capitalized and put that out to market, so that not just the big companies, but the everyday investor, and even Joe Blow filling his gas tank, paying for his gas at the pump with octane from his Octaneium wallet, can put some of his Octaneium into funding oil exploration. So then we're really democratizing the capital market in the petroleum industry, and that's going to really do some really wonderful things for improving how exploration happens. It'll improve how explorers, if the consumer wants more environmentally sensitive oil exploration, that'll be encouraged within that contractual system. It'll make more capital available at better terms for the explorers, so they'll be able to deliver oil to market cheaper, and that'll bring down gas prices and make them more stable for people worldwide. So there's tremendous potential in this sort of thing. And we think that ultimately these sort of methods of blockchaining a whole supply chain, utilizing these different sensors, feeds, is something that's going to apply to a whole lot of other industries as well. It's one of these big ideas for expanding blockchain beyond just fintech into all kinds of industries.
Yeah, absolutely. I think that's a very interesting also sort of exploration of the application of blockchain. And the more that I hear about it, the more I'm like, wow, that's fascinating. Let's talk a little bit about the oracles, because that's the place where cyberspace meets space.
Right.
And that and there's security questions and lack of education around how that works, or like how are you guys thinking about that problem?
Yeah, it's funny that Vitalik and the other guys that created Ethereum called them oracles, because for a lot of people it's sort of a kind of a supernatural thing. It's like, because people don't understand that a regular smart contract can't really interact with a URL of data from a website. And that's why we have an oracle. So the oracle is essentially an API program that takes data from these different URL data streams and it has the heuristics for analyzing those, and then provides signals to the smart contracts as to whether something's meeting a standard. Like, for instance, in oil, is the oil flowing at a certain rate? Is it the proper grade to match? Is it Brent crude? Is it heavy? Is it sulfur? There's all kinds of different grades of oil, and so what grade is flowing through the pipe at that time? What type is being refined? How much? What's the fraction ratios between that, so they can see what its purity is, what's coming out in terms of the different distillates. So there's all kinds of data, and the smart contracts really need go no-go signals as whether they can go forward or not to execute. And so the contracts can't be dealing with a constant flow of analog data, which is really, even though it's a digital sensor, it's over time, there's so much variability, it becomes an analog signal. And so you really need to have this API in the middle that analyzes the data and provides a cogent answer for the smart contract about whether yes or no to do something.
Right on. How do you deal with the integrity of that data that's coming from the actual meat space?
That's a great question, because it's what people have always said with computers: garbage in, garbage out. If you're providing false data to a oracle, claiming that it's a valid sensor but it's not, you could theoretically hack the oracle and create false trading data. But the fact is that natural behavior of sensors isn't so easily fakeable. It's like the difficulty for computers to generate random numbers. Okay, computers can't actually generate random numbers. They can generate pseudo-random numbers, but they can't generate the sort of randomness you need for keys. The way to do that, for instance, is if you're moving your mouse around, it looks at and it takes out the significant digits and looks at the tiny little, insignificant digits of the movement and the timing, and that's random data because it's being generated by a person that's moving things in a non-automatic way. And so by the same token, natural processes have natural randomness to them, and those random numbers are superior, obviously, to pseudo-random numbers. Pseudo-random numbers have a repetition to them that can be hacked. And so if someone knows what algorithm you're using to generate a pseudo-random number, they can attack your cryptographic algorithm and hack it. And so you really need to utilize methods to generate true randomness to protect against that. And you can use that same methodology to look at sensor data, and you can tell whether it's natural randomness or whether it's faked. Because creating a program to produce fake data is going to be easily detectable. It can't, because the numbers are pseudo-random at best.
What about the human corruption and human error side of things? You're saying that some of this is already happening in Mexico, and I don't know if you have any kind of specific examples. And I don't doubt that there is some of that corruption. I think Mexico has somewhat a reputation for having a kind of like a certain amount of political corruption, right?
Well, for years.
But is it something like this hardware is sort of making it so that only very specific sort of kind of people would be able to kind of manipulate that data, where sort of like getting the lawyers and getting the people out of that chain, or like how do you guys? Yeah.
Well, for instance, you can use one sensor to check the validity of another. Okay, so if I've got a pipeline and I've got valves along the pipeline, okay, each one will have a sensor telling you what the flow rate is, and knowing the size of the pipeline, you can tell how much oil is flowing through it. So you would have to basically fake every one of those sensors in the same way. But at the same time, those sensors are going to have a natural randomness to them normally that you can't replicate by hacking. So if you are seeing, for instance, the same level of pseudo-randomness in all the sensors, then you're saying it's all fake. So in terms of the corruption and so forth, and Mexico is just one example. There's other countries that have this sort of problem. Nigeria, for years, they have pipelines coming from the oil fields to the coastline, and it's not so much the oil company itself, but the people living in the area will break into the oil pipelines and siphon off oil from the pipelines, and it's led to a lot of big oil spills. But they're pirating the oil. And so they have, it's a big security cost, and most people don't know that we have troops in Nigeria specifically to protect the oil pipelines, because Nigeria can't afford to provide that protection themselves. And these sort of issues are all over the world. I mean, they've seen it in Russia. There was all the similar sort of disruption in the petroleum industry in Russia in the 1990s, with every mafias in different areas around Russia competing against each other, each one trying to take a cut of things and so forth. So it's something where it's impossible for them to really fake it if you have a good data analyst who can find the fact that it's not random data by correlating things against each other. So when you have enough sensors, you can correlate and see where the outliers are, where there's the lack of sufficient randomness in the signal, and things like that, to really zero in on where someone's trying to corrupt the system.
Yeah, and there's a clear market value in the integrity and the quality of that data.
Right.
And so there's going to be probably constant innovation in order to kind of integrate this sort of cyberspace financial technology into the analog biological sort of movements of things, and the hardware that's integrating it, right? And there's going to be constant sort of evolution of that technology, right? As we're seeing some of the attempts by cryptocurrencies like Cardano, and some of the work that some of the people working on Cinero were exploring, which is how to verify smart contracts and the integrity at every layer of the code, from binary all the way up to sort of solidity, for example, right? Mm-hmm. And there's sort of I think the word was can't remember the exact term. I interviewed Vlad Samfir, one of the core Ethereum guys, on this, and he was talking about. Yeah, I can't remember the exact term, but there's something about that. Yeah.
Yeah, checking it at each layer of processing is another thing, because there are chips being produced in places in the world where you wonder at the integrity of who's producing the chips. And this has been a question from various areas for a long time. I remember when, for instance, Lenovo was bought by the Chinese from IBM, and everybody wondered whether the Chinese were going to put backdoors in all the Lenovo computers and routers that were going to let them hack everybody's networks and so forth. And that was a huge issue back then. But it's you see where in the free market, it's a bigger damage to Lenovo to allow that sort of corruption than to any benefit they could possibly gain from that sort of thing, because there are enough experts out there that if there was such a hack, that people would detect it, and that would damage their reputation enough that the value of the company would drop, their revenues would drop, people wouldn't buy their stuff. It's like, for example, Volkswagen hacking their car computer emission data. They finally, they were doing it for years, and people actually started looking at the code and what it was doing, and it became obvious that they were faking all the data of what the emissions were being produced, and they were basically allowing you to have more power at the cost of higher emissions than was being reported. So the computer could tell when your Volkswagen car was being emissions tested, and it would automatically go into an efficient emissions mode. So it would it would say, I'm working right when it's being emissions tested, and then when it's not being tested, it goes back to the high power mode.
Nice.
And that was the reason why, Volkswagen lost billions over that, and
Right.
plus a class action lawsuit, and, huge warranty replacement costs, and just, immense damage to the company.
Wow.
Where, they've suffered as a result, even though they had a short-term gain from being the leader in sale of diesel-powered automobiles. They could charge more, they were the most popular, and now they're the least popular. And they've lost a huge amount of shareholder value, profit sharing. The executives responsible, have been dealing with prosecution over that. So these are the sort of market-driven mechanisms that, when they're allowed to work, when people are able to look at the data, look at the code, and sort of like the whole basis of the whole open source movement, when you can look at the code, when you can audit the code and the data, and people independently can say this is not working the way it says it works, then you have accountability through the marketplace, where the market can say, we're not buying your stuff anymore. We're not investing in your company anymore because you're not an honest player.
Yeah, and it is a kind of fraud that they executed on, on people who were buying it specifically because of those, or perhaps in part because of their emission reports, right?
Now,
So
if you don't care about emissions,
then you don't care.
I'm sort of a skeptic about global warming anyways. So, and I like power, so I would be like, I can get a cheap Volkswagen now because...
There you go. So you're a winner, yeah. Yeah.
So.
All right. Well, yeah. So that's Octane and Intermex.
Yeah. Octaneium is the blockchain. Octaneium is a company that's a joint venture between Galactic Systems and Intermex. And Intermex is actually going to be going through renaming itself the Octane Group, and to basically maintain that branding across the whole structure of things. And these guys are Mexicans and Texans who are really interested in bringing a lot of modern first world petroleum technology into upgrading the Mexican infrastructure, but at the same time the Octaneium blockchain can be applied to any nation's oil infrastructure to make it more efficient. But we really see where nations that have antiquated oil infrastructures are the ones that are going to benefit the most from this sort of modernization. It's sort of a bootstrapping where they're able to take advantage of the newer technologies to easily get up to, and particularly utilizing blockchain to get up to being competitive with all the other nations. For years, Mexico was sort of a joke in the oil industry because Pemex was the only oil company in the world that couldn't seem to turn a profit on the oil business. And it was because, so much union corruption, there was so much graft, and there was losses, there was such antiquated technology. There's all sorts of reasons why. And this sort of frustration by the government with these problems led them to have the political will to finally deregulate the business, and so now we're getting to the point where we can utilize technology to really take advantage of the deregulation to make Mexico have a world-class oil industry.
That's going to be fantastic for the Mexican people, and there has been we experienced this in Acapulco, that kind of started the beginning of the deregulation of Mexico's sort of nationalized oil stuff, market. So very good stuff. I'm looking forward to seeing how that develops. It's a good story. We could probably talk about it as when things sort of, there's big updates or as things move forward. So that's very cool. I want to ask you about Lightning networks. All right, so let's talk about Lightning networks a little bit and scalability. Do you want to pick that up?
Yeah.
Okay. So let's talk about Lightning networks and scalability. What are your thoughts on this sort of the great Bitcoin fork and the great scaling debate, and what's your estimation as to Lightning networks?
Well, I with regards to Bitcoin scaling and forking and the whole debate going on, I'm sort of like the Rodney King. I'm like, can we all just get along? Because I try to assume, rather than assuming that there's some conspiracy by the banks to take over one fork or the other or something. I trust everybody that's been in the industry a long time that their goals really are to make the blockchain that they're working on solve problems and serve some need that they're focusing on. They may not have the same focus, because Bitcoin is both a medium of exchange and a store of value. Sometimes a form of money doesn't serve both purposes as well as one as well as the other, and maybe it shouldn't. So, Bitcoin Core they seem to be focusing on the store of value utility function for Bitcoin, and a lot of people, and this is something I've been talking about a while. It seems like they have an interest in making Bitcoin Core a sort of international settlements currency, and so that it doesn't need to have as much scalability as to be a cryptocurrency for everyone. But at the same time, with Lightning networks coming in, this is promising to actually provide that sort of scalability. I don't know if it's going to do that well. I haven't studied Lightning networks enough to give an informed opinion about it. I trust that people that are pushing this, that is their goal in mind, that they have that they're doing it in good faith, until I see actual malicious activity going on. And for the same token, Roger Ver and Bitcoin Cash, they're trying to solve the problem. They forked it because they didn't see sufficient action by Bitcoin Core quickly enough to what they saw as easily a very exponential curve in adoption of Bitcoin, and Core wasn't scaling things fast enough to catch up with it. And we all saw it with, the price spikes and the huge mempool backlogs and the spikes in the transaction fees. And these are things where you needed those price signals to be the market impetus to motivate change. And a lot of people are like, why couldn't we just implement change along the way and solve the problem before it becomes a problem? And it's like, sometimes markets need to provide those signals. We can foresee that this is going to be a problem, but until the market actually provides an actual signal through a price spike, through things like that, then there isn't really a economic incentive for implementing that solution. And it does cause volatility, it causes disruption, and that's the messiness of freedom that we often talk about. Is you can't plan freedom, because freedom is the ability to do what you want. And if you have the ability to do what you want, and everybody does, then you can't plan what people are going to do if people have free will. So you have to allow that sort of freedom. You can predict it. You can create plans. You can try to create technologies to solve for problems you see coming up. But until the market agrees through price signals that a problem is actually a problem, there's no incentive for the market to adopt whatever solutions you've created.
Yeah, I often think when I'm looking at the price and I'm thinking about the history of Bitcoin, and particularly the forks that happened with Ethereum with Bitcoin were kind of very, very interesting to me. But I often think that it behaves like a living organism of a sort, and you can see that behavior in the price chart, because you can see the exuberance and the optimism, right? And then you get a little bit too arrogant, and then there's a correction and a kind of psychological. Sometimes it acts
like a 5-year-old, so that's the living organism.
Yeah, yeah, absolutely. Yeah, and if you compare that with fiat currencies that are sort of very much centrally planned and controlled and managed, right? And they tend to move in very much of a flat line, right? And so, you gotta wonder how alive they are compared to other things. But
there's another factor in network effects that most people don't know or understand, is that there's this thing called the adoption curve, and it's sort of an S curve where you have early adopters, and then you have this exponential growth in adoption, and then things will mature and level off. And somewhere along that adoption curve, it's, at first you get a lot of volatility just because you don't have as many participants, and many of the early adopters become the whales, and they can exhibit an adverse impact on prices in that market. And so that's where you get a lot of that volatility, because the volume isn't large enough to overcome the power of individual market-making traders. But once you reach a certain level in an adoption, that you have enough volume, you have enough other participants in that market that they can overpower the individual capacity of individual market makers, and you reach a natural stability. So most of the stability we see in fiat currencies in the world isn't really because of the central banks. It's because there's so darn many people using those money. Mm-hmm. And so when Bitcoin or other coins reach a certain point on their adoption curves, you're going to see the volatility is going to taper off naturally. And there'll still be volatility. There'll still be market reactions to large events that people may panic. People, new technologies may really adversely affect right now we're seeing the impact of radically cheaper mining technology is one of the things that's really forcing the price of Bitcoin down. Whether it's the Halong Dragon miner that's like $1,500, whether it's Bitmain, which just dumped almost all of their inventory on the market at half price, those things, because anybody can then buy those miners up at a cheaper price, those people can then mine and sell their mined Bitcoin at a much lower price than they would need to if they had to buy at the old market price for the ASICs. And so these sort of events can create these disruptions, and people are like, why is this happening? Well, if you really look at what's happening in the industry, you can actually see where these changes are happening. I mean, it's like with the flippening between Bitcoin and Bitcoin Cash, that where in November there was a point where a bunch of the Bitcoin Cash guys convinced some of the big miners to move a lot of their hashing power to Bitcoin Cash from Bitcoin Core, and partly because at that point, because of the adoption of the new difficulty adjustment, Bitcoin Cash became much more profitable to mine than Bitcoin. So it was like, oh, miners like, of course we're going to move over there. That's where it's going to be more profitable for us.
Yeah, and an interesting note on that is that the rate of blocks mined during that peak was huge. Like they were mining something like 54 blocks an hour or something like that, right?
Yeah.
And so there was a huge emission, right? Like the emission.
And the blocks weren't even full. There was, very low, but they were all hashing the heck out of it. And number one, because at the time the difficulty adjustment for Bitcoin Cash was every 144 blocks, and Bitcoin Core is 2,000 plus. You had Bitcoin Core was stuck at this high difficulty level. And so people are like going over to Bitcoin Cash. And the loss in hashing power forced the difficulty of Bitcoin to go down.
Yeah, and it slowed the block emission of Bitcoin. Yeah.
And so then it flipped back. And I had seen this happen, and I actually predicted 2 weeks in advance that the price of Bitcoin would drop from over 8,000 down to 5,500. And it went right to the dollar. And I had published my prediction on LinkedIn, and afterwards people were like, how the heck did you prove it? And it's like, I just looked at the difficulty in the hashing power. This is a bit difficult, because all of these guys who are speculators on LinkedIn who aren't crypto people, are thinking of using standard trading algorithms to predict prices.
Yeah.
And the fact is that crypto doesn't trade according to standard trading principles, because it's something, particularly with Bitcoin and Bitcoin Cash, because it's proof of work, you're dealing with something where a lot of the coins are being newly created based upon the profitability relative to each other to mine those. And so it's something where you have to look at things like hashing power. Just like if you were to look at the gold market, you'd have to look at how many ounces of gold are being pulled out of the ground each month, not just how much gold is being traded on the markets.
So we talked about how there's certainly evidence that miners are economic actors, and one of the things that happened during the Bitcoin B2X potential fork was right as the time to fork was coming. A bunch of miners in this private group, there's some screenshots leaked of that where it said, we'll mine at a loss for 12 hours. But after that, you're on your own. So they told this to Bitcoin B2X fork, right?
Yeah.
And that's when Gavin Andres and, Jeff, Jesus Christ, it's probably better that I remember. Jeff Garsick,
Yes.
Jeff Garsick sort of said, okay, it's canceled, right?
Yeah.
Because he didn't have the confidence of the miners. And so there's evidence that they're economic actors, but maybe that's not the full picture. How do you see the cause and effect, for example, in that example you just gave, of hashing power and the price of cryptocurrencies? With Bitcoin, let's say.
How it would do what?
Yeah, like what's the relationship between the difficulty, the proof of work ratio and...
Well, proof of work, you're doing work. So you're expending a large amount of electricity to hash those blocks. And the higher the difficulty, the more electricity you're consuming to hash the next block. So if you have a high difficulty rating, then you've got to get a high price for the Bitcoin you're earning. And so that's one of the things that pushes Bitcoin prices up, as the difficulty is rising.
Yeah, but speculators don't tend to look at hashing power. At least the traders that I know don't look at charts that compare the proof of work difficulty of cryptocurrencies in order to determine their speculative value. Nobody looks at that, even though it's a fascinating thing to look at, and I think that's what we need better data. But that doesn't seem to me to be one of the metrics that maybe the traders that I know are looking at. Maybe some people are.
Well, since I published that prediction, more have started to look at that.
Right.
Because it becomes clear that because Bitcoin and Bitcoin Cash are proof of work that are designed to behave like gold and silver money, you need to use the sort of heuristics that gold and silver traders use. And they're not looking at it like a stock. They're looking at it, it's a resource being pulled from the ground. So you have to look at, hashing power is mining. That's the reason we call it mining. So, you're pulling Bitcoin out of this ether, out of the space of the empty space of mathematics through this work. And so you need to look at that. And it's even though
you're mining cyberspace,
you're mining the economic system. And even though the number of coins being generated for each block is relatively small compared to the whole market, the fact is that those coins are largely going to be dumped at or maybe slightly above or below market prices. So based upon the cost structure for the miners, they're going to be motivated to hold coins if it's too
we're
expensive.
talking about supply economics, right?
Yeah.
Like sometimes it makes sense to hold the coins you earn, sometimes it makes sense to sell them.
But if the prices, if their costs are low, then they're going to dump if the price is higher than they think it's going to need to be, and that'll bring the overall market down. So you don't need to have a large trading volume really to have a huge impact on prices. If you are, for instance, increasing supply in a market by, say, 10%, you can impact the price of that commodity by as much as 50% or more.
If you what?
If you increase the supply to a market of only 10%, you can actually decrease the price by as much as 50% or more.
Right.
Because it's not a linear relationship between supply and prices.
Yeah, that's right. You would sort of kill a bunch of buy walls. You take out a bunch of buy walls on the way down,
Absolutely.
and then the price would have to sort of stabilize and stuff. Yeah, interesting. All right. Well,
so everybody, for those of you here, the dog that's been coming in and out of our view is Ginger. She's our chief morale officer at Galactic Systems, and she's a bit of a Facebook celebrity in her own right. So
is that right?
Yeah. So
nice to see her. We're gonna have to take a selfie with her. Oh, there she is.
Yes, you. She's a bit shy though.
There she goes. She's TV shy. Nice. She's a rock star, a diva. All right.
What's up? You need to chill out, okay? You gotta chill out. Just chill out. Yeah.
All right. So we talked about a variety of things. Do you have any predictions or any kind of what do you see happening this year in crypto?
It's really just exploding. It's hard to keep up now. There's so many cool things happening, I'm sort of on social media. I'm kind of a troll with people, and so I like to do practical jokes to make fun of some of the things that I see. So, for instance, with the whole BitGold thing, people who are not really aware of what BitGold was, particularly if they're gold bugs, people get these ideas of let's make a gold-backed cryptocurrency, and I'm like, you're doing it wrong. And it's like, would you mint gold coins and back them with diamonds? No, it's stupid. It's redundant. Okay, so why would you back a cryptocurrency with gold? And I've created this sort of gold nut metric of how crypto is accelerating in adoption by how frequently someone comes to me with a new plan to back crypto with gold. And so, you know, two, 3 years ago, it used to be like every 6 months I'd run into somebody with a new plan. And, you know, half of them had never heard of BitGold, and they try to start calling it BitGold. And I say, no, this was, you know, you can't do that. This is
too late.
Too late. And then it's gotten to the point now where I'm, you know, hearing about a new project that somebody's they think they just came up with this idea themselves new. Every like, you know, 6 or 7 days, someone comes to me and, oh, there's this new project, or I want to start this. And it's like, bro, you know.
You're like 10 years too late. 15,
So,
20
you
years
know,
too late.
and BitGold wasn't even gold backed. It was to avoid needing gold backing. And, you know, that's, you know, it's a whole reversal of the idea. So
they find you through their sort of individual, like they come up with the idea of BitGold. They're like, oh, that's a great brand, it's a great idea, and then they go Google it, and then they find your name, and
they find my name, or just because we're in similar libertarian circles, and a lot of libertarians tend to be gold bugs as well.
Right.
Then they're like, I want to make a gold back, and I'm like, buddy,
you don't get it. Go read proof of work stuff.
So
That's funny.
you know. So, you know, there's another thing with all the Bitcoin forks. You know, I got, you know, the Bitcoin Platinum and Bitcoin Black and some of these other ones coming out. That one you were calling Bitcoin Classic.
Bitcoin
Bitcoin Classic. That was the fun. So I've created my own Bitcoin fork. It's called Bitcoin Uranus. And now I'm a space nut. I like all kinds of astronomy, and I feel that the planet Uranus is one of the most unappreciated planets in the solar system. It's the butt of all these internet jokes, you know, about Klingons around Uranus and so forth. And so I made Bitcoin Uranus to allow people to register their memes on the blockchain, starting with Uranus memes. And all sorts of potty humor type memes, and so you can call it Bitcoin Uranus, you can call it Bit Uranus, and you can call it B Uranus. But I'll be very, very, very upset if you pronounce it Uranus, because a blockchain deserves to be called by the name that it wants to be called, and and so the first 3 letters of the wallet keys is BUT. And the trading symbol is BUT, and when we manipulate it, it's going to be called a butt pump. And when people are trying to block the trading, it's a butt plug. And so there's, you know, we're going to have all kinds of fun with this. So
that's great. For those who don't know, watching the video, I'm like holding my laughter. So yeah, buy Bitcoin, or sorry,
Bitcoin Uranus.
Bitcoin Uranus, do it. And you're gonna be doing some some crypto meme question. Pepe Cash or Crypto Kitties?
I'm a Pepe Cash, mostly because I didn't vote for Donald Trump. I voted for Mr. Johnson, but and you know, partly because I'm a fan of Gary Johnson, but I also thought that the ticket by the name of Johnson Weld was just a fantastically trolly name for a political campaign. But you know, I've become a huge fan of Trump as a master troll, as a fellow troll. I admire his trolling skills. I've never seen anyone so successful in driving all the people I despise into fits of frothing rage. So, you know, my props off to the troll Donald Trump, to the Kekistanis out there, to Pepe and the Lord of the Underworld, the Egyptian god Kek. You know, my
Praise
hat's
Kek.
off to the meme magic that you've accomplished in the past year that's provided so much entertainment to fellow trolls around the world. So, you know.
And money to Pepe artists.
Oh, yes.
There's
yes.
money happening in the crypto.
And I'm waiting for the
party.
Pepe memes to be fully fledged out enough that you can actually, because so many have been designed to be like playing cards. Mm-hmm. So that, you know, when you can actually start playing the game Pepe Cash as playing cards. That's and that we're gonna need to have like televised Pepe Cash games.
We will live stream the first Pepe Cash game, and then we'll probably do a tournament at some point. Yeah.
So yeah, as you can see, I'm a dog person, not a cat person. So though I find crypto kitties humorous, I'm just not a cat person, and so sorry. Even though I've got a lot of friends in 4chan, and 4chaners are nuts about cats, sorry guys, but
Pepe Cash takes this one.
Yep.
Right on. Yeah, I'm a Pepe Cash guy too. People know. Shout out to John Villar. Did you see the interview that I did with him?
No.
Yeah, we did an interview in La Bitcoin in Bogota.
Okay.
We talked about Pepe Cash and Venezuela and Petro. It was hilarious. It did pretty well. Awesome. Another prediction. What is going to happen? Where do you see crypto in 10 to 15 years?
Long term, crypto is going to radically transform every part of our world. Simply because so much of our world has become centralized. With the walled gardens, with our government, with the corporate structures and so forth, that there's blockchain as a whole is empowering people to decentralize things, to democratize our entire civilization all over again. And I talked about this in my talk at Fourth Block the other night, was that the first industrial revolution created a lot of these factory cities and company towns where you had machine party politics and built these patron-client relationships that were really inimical to civil society. So rather than you and me relating in an egalitarian fashion in a company town, it would matter who's the boss and who's the employee, and what favors can they do, and if you want to keep your job, you're going to vote for the right candidate and that sort of thing. And then in the second industrial revolution, which was like the automobiles and flight and so forth, it enabled people to be a lot more mobile, have greater geographic mobility, more democratization of wealth, but at the cost of having more regulation in government, unionized workplaces, and that sort of thing. So you still had a different sort of centralization going on. And then with the information revolution, which is the third industrial revolution, you had the walled gardens come in with AOL and these other companies where they're turning people into information chattel, where they're controlling and owning our identity and selling our data. And I think that we're getting to the point now with blockchain where we can use it to really decentralize all of these different power structures, whether it's political parties, whether it's centralized governments, regulatory systems, going to online communities. They can all be decentralized. And particularly with government, because that's the most decentralized power structures in the world today, we're seeing issues with, for instance, the fiscal sustainability of governments like the U.S. government, like Europe, and so on and so forth. China, we have these huge baby boom generations that are starting to retire and putting increasing strain on their retirement systems, their welfare systems. And they, just the U.S. alone, not counting the cost of Obamacare, the U.S. has $120 trillion in unfunded liabilities in the coming 20, 30 years. And they have no clue how to pay for it. I mean, even at 100% tax rates and 100% confiscation in inheritance taxes, there's nowhere near enough money that they can steal to pay for all those things. They could restabilize things by radically changing legislation, like changing the retirement age to the life expectancy. But it's completely politically untenable. There's too many voters out there who would refuse to accept that kind of change. But we can decentralize government with blockchain to make it fiscally sustainable again. We can starting with the more unstable governments, but eventually to our own, is to have, for instance, we could convert the dollar to a crypto dollar and have a national blockchain that the crypto dollar is on that allows for government to decentralize its functions as smart contracts on the national blockchain, so that people can directly interact with the national blockchain for their governance needs on a voluntary basis. And then for things like entitlements benefits, whether it's unemployment, Social Security, welfare, Medicare, government pensions, all of these sort of benefits that are cost centers that are the source of these unfunded liabilities can be turned into profit centers by enabling people seeking these benefits to upskill into 21st century capabilities by mining the national blockchain. And this is one of the reasons we are pioneering the proof of participation on the Galactic coin is national blockchains can implement proof of participation, so that to mine the national blockchain, you have to be a citizen of that nation. And so therefore it's limiting who can participate in mining. It makes it more profitable, while as the more you decentralize more functions of the government, it monetizes more of that mining activity. So to the point where right now there's a lot of calls in various circles for universal basic income, but they really don't know how to fund it. But you can do that with blockchain-based government decentralization.
So it would be something like Dash is, the budget system, where some of that money would be consistently going to identified wallets that have been through an implementation of proof of participation. They united with sort of a personal ID, right?
Yep.
Government sort of vetted ID, and then they can deliver that money. But just to clarify, like, proof of participation is not in Galactic coin is not it's not a biometrics thing. It's more
Right.
like a sort of identity of the individual character that
where,
you're creating in
where
a game.
you're using it, if you've got to be logged into one of
Right.
these virtual reality
So
platforms.
it's an identity system that's cross-platform, but it's sort of pseudonymous. And
Yeah,
right. Okay.
right. But the idea is promoting this as something where you can, it's without having to have a permission system, you can still limit the participation to a select group of people. So that, for instance, for this, you would have citizens can mine the national blockchain. So you won't have, one country's entire welfare budget going to data centers in China, so which would make it an untenable situation. So this sort of situation is going to make governments fiscally sustainable again.
They're going to have to, right? Because they're going to be competing
there's
against...
really no way for them
Yeah.
to survive the coming years with the technological singularity, with the retirement of the baby boomers. And with blockchain, people are going to be able to offer so many different blockchain services that'll directly compete against government, so that they'll have the choices. And so with national blockchains, people will gradually, as more and more of their governance needs become smart contracts, they'll become more and more comfortable with blockchains as a standard part of their culture and society and economic activity. Then you can start to look at the question of, just like people do with health insurance now, with health insurance portability, why do I need to use this blockchain just because I live at this address? And so then we can really get to a situation where we can have a public debate locally and globally of whether we must be in a monocentric governance system like we have now, or whether we can shift to a polycentric governance system where I can choose what governance needs I want satisfied by choosing what blockchains I want to participate in. So then the different national blockchains, if it doesn't matter what geography you're in, then they have to compete against each other in providing the best level of service to the users.
In relative to the environmental sort of local pressures and needs and and culture of what's
Right.
happening. So there's going to be a lot of market, I think, competition in that, a lot of market variability. Very, yeah. One of the areas of speculation in this is that Bitcoin and cryptocurrencies are going to make governments obsolete in some way. I'm not sure that I completely buy that. In fact, I think we're starting to see Venezuela. I think Venezuela is an excellent case study for the power of Bitcoin and power of cryptocurrencies. And I think we're going to be seeing, I've been hearing some things that we're going to see Venezuela tax miners, Bitcoin miners, and that's actually beneficial in a sense to Bitcoin miners because that means that they can have a government guarantee of security against petty crime as well as
Well, they're already
government
being
crime.
taxed by Venezuelan cops who are basically taking bribes to not arrest them.
Yeah.
So this is more of systematizing it and protecting them against being taxed by multiple cops.
So it protects them, like at least gives them some path to be protected from corruption,
Right.
as well as from petty crime. And like talking to some Venezuelan miners in Colombia, they're like, yeah, this is really great for us. Like we're perfectly fine giving the government 20% of our profits as long as we can keep mining and making a shit ton of money.
Yeah.
Right. And so Venezuela is a very extreme case because the Bolivian peso is just going, and Bitcoin's going up, right? And so makes it's very profitable to mine there, and electricity is free, right? And so so we'll see how that happens. I think that we may. Do you see some of that happening in other countries? The taxation of miners and stuff.
I think that there's going to be increasing acceptance by a number of government, both in the idea I was talking about with national blockchains, as well as acceptance and taxation of miners, particularly in countries where people are recognizing that the cryptocurrency is more trustable than their own government.
Right.
And so this is something where the governments are actually going to have to step up and provide a better level of service. Mm-hmm. If they're going to tax it, people would wonder, why should I pay a tax to a government I don't trust to be able to use a money I do trust?
Mm-hmm. Yeah, it's really fascinating. By separating money and state, it's actually potentially like it could bring back down the size of government back to its original, at least in the United States, its original purpose, which was the security of the sort of civilians, and that's it. She agrees with me. She came here to give us a hug.
Have a seat. Sit, Ginger. Can you sit?
All right.
Have a seat. Come on, lie down. Lie down. Lie down.
Hola. What's
You
up,
sticking your
buddy?
butt in my face? Is that a signal?
You're trying to tell us something. What's her name again?
Ginger.
Ginger.
Come on, lie down. Lie down. Yes, there you go. Lie down. Yeah, you.
Here, I'll help you with the leg.
There we go. Good
There we
girl. All right, now we can continue.
Yeah. So it may be like it's going to limit governments fiscally, and it's going to, as cryptocurrency start to serve certain governance needs. The people are going to have to start being more fiscally responsible just because of the reality of the market. Because there's always going to be an option to sell your crypto and buy Bitcoin and hold it. So the value of fiat currencies are going to keep going down,
Right.
and you can't play the political games that you can play right now.
And I think that, as libertarians and crypto anarchists and anarcho-capitalists, we need to have a bit more of a realistic view of how this adoption is going to play out. Because, a lot of us, we were fans of fiction in the 90s of books like Snow Crash and Ready Player One and so forth. And like Snow Crash in particular predicted a society where there'd be a post-federal society where the government collapsed because it couldn't collect taxes because everybody was using a cryptocurrency online to avoid them. And that was sort of one of the dreams. Snow Crash was one of the favorite books among myself and a lot of these other guys that Cypherpunks and so that was kind of the future we were all hoping for. But I think that with the slow adoption of broadband, and as long as it's taken to get cryptocurrency adopted, it's given government the time to play catch up to, and it was natural to notice that they would develop tools to counteract that and in some ways co-opt the technology. So we need to not assume that a technology is going to just make government obsolete, because government is just as capable of using a technology as individuals. And I like to think that most technologies are inherently empowering the individual more than they are government, but at the same time, the government still has a lot of ability to mobilize technology faster than markets often do. And so we need to be cognizant of that and accept that governments aren't going to disappear overnight. And we can encourage them to do better, be better governments, downsizing, and provide better services that through the consensus and authentication tools in blockchain. But to assume that they're just going to disappear overnight is a bit naive.
Yeah.
And part of me is disappointed at myself coming to that realization, but it's something that I think that people need to accept. And we all want to live in a just society, and we have different ideas of what that means. And some of us think that a just society is a society with no government. But to a lot of people, the idea of not having a government providing certain guarantees and protection isn't a just society. If you're not guaranteed that your contracts are going to be enforced, that doesn't sound like a just society. If you can't trust that private arbitrators are going to act fairly, then you don't see as a just society. And a lot of us think that a market for dispute resolution does provide more just solutions. But, and we're trying to create the tools that enable us to demonstrate that. But we have to demonstrate it. We have to with ICOs, we need to create a community of understanding that we're still responsible for creating the tools for ICOs to not be scams.
Yeah.
Creating an industry self-regulating organization so that the SEC won't be encouraged to come in and in a draconian manner impose their own regulations. Because in government agencies, really, despite what a lot of us think, don't have the first trigger to regulate something. They actually do tend to look at industries to self-regulate first. And it's only when industries refuse to do so that they're able to build the political will to develop regulations to bring industry to bear. And so...
Yeah, this is a fascinating area that we were talking a little bit about it earlier today. And it's... I've sort of written somewhat and talked about the need for people to self-regulate in ICOs, and for us to develop tools for it. Because in a sense, if we don't try to self-regulate, we are validating the SEC's argument or the regulator's argument that we are not of good intent. We need to demonstrate good intent by self-regulating and self-restraining and calling out the scams, or at least.
Ginger, just chill out.
Or at least not promoting scams.
Yeah, and there's a lot of valid arguments that blockchains are themselves self-regulating because this way that smart contracts work. And yes, that's true, but at the same time, the actors in the industry are not self-regulating. Humans are still going to be humans no matter what, and there's still going to be people trying to
scam other people, or find holes.
And that's where you really need to, as long as we create standards for the smart contracts to ensure that scammers aren't able to scam, and then the community, the public holds ICOs to task saying you're not meeting these standards, then we can basically motivate the market to say we're not going to fund these ICOs because they're not meeting these standards.
Right.
And then that's going to tell agencies like the SEC that they don't need to regulate because we're already doing it.
Yeah, and so let's talk a little bit about some options that people that want to launch an ICO have regarding self-regulation. I think one of the best models that I've seen is doing capped ICOs, where you say we only want to raise $5 million or $10 million or $500,000. We're not going to accept any more money than this, and we may sort of reserve the right in the future to do a second wave of ICO once we reach certain goals. Right. That's one way to do it. Another way to do it is to say we're going to raise as much money as we can get, but we're going to lock 20% into this smart contract, with this escrow, which is a little more complicated, with this escrow party, and they'll be released if we release this particular, we should reach this particular milestone. And there's also sort of apparently still exploration of the DAO model, where you're trying to replicate a corporate structure through equity ownership, where you can enforce sort of majority equity decisions on the movement of the sort of treasury funds. Mm-hmm. And that's probably, I think that's probably going to happen within the area of the space that's doing SEC compliant ICOs, where you get KYC AML, so you have that legal kind of ecosystem within that ecosystem, and then it'll probably emerge from that, and then at some point maybe we can start breaking away from that with more confidence from the SEC and stuff like that.
Yeah, and you really need to prove that you're acting in good faith to be able to justify to the SEC that they don't need to use existing regulations. I mean, what a lot of us are doing right now is if we're going to do an equity token ICO, we recognize that an equity token is a security. We admit it up front, and we're not trying to hide behind various structures or foundations or whatever, because it's really not, in my opinion, really ethical, even though it's legal. And you can definitely get lawyers to tell you this is perfectly legal to do, and so on and so forth. But I wonder how, if people really understood these sort of structures to legally avoid the regulatory regime, how confident they would be in those blockchains. And so, we basically took the problem head up front, and we said, we're going to, we're Americans, we're incorporated here, we're offering equity, we want people to have equity in our company, so we're going to comply with the SEC regulations, with Regulation D and so forth. So we're doing this all by the book. And by showing that ICO companies doing equity offerings are doing things by the book, then we can say to the SEC, listen, we're operating in good faith to comply with the existing regulations, but really your existing regulations kind of suck. For instance, the whole accredited investor rules is, it's ostensibly meant to, quote, protect the consumer or individual investor, but the fact is it really only protects them by not allowing to participate at all. Mm-hmm. So you've got to be $250,000 in income, $2 million in assets,
which is very few people in the
very
world.
few people. There's I think 16 million millionaires in the United States, 15 million millionaires, and
talk about oligopoly. There's an oligopoly, right?
And to reach 2 million, you're dealing with less than half of that. So the population of investors who are allowed to participate in these private equity placements is really restricted. And number one, that limits. Ginger, lie down. Sit your butt.
Yeah, sit down.
Sit.
Girl.
Come on, sit. You can do it. Sit.
Hola. Well, girl.
Are you becoming a camera fiend? Huh?
She's liking the attention.
So, as I was saying, it limits the size of the capital markets for private equity, and it excludes people from it, so it's not really protecting them. And it limits people's ability to gain upward mobility socioeconomically through investment. And so that's not protecting people either. That's creating stratification in our society. And so I would argue that, once we comply with this process, one of the things we would do is go to the SEC and say, we're operating legally. We're good faith players here, but we would like to see modification of the accredited investor rules. We would like to have it be income in a progressive income base, so that if you are, let's say you're earning, $2,000 a month, you can risk up to $200 a month on investments in private equity. You can't do any more. If you're making $3,000 a month, you can do $300. So that way you have
fully collateralized sort of.
So, well, it's a matter of scaling how much risk a person can take based on their income. That scales with income, rather than being just this hard cap at a very high level. And I think that really one of the reasons for this current rule for the accredited investor is that it's not really intended to protect consumers. It's intended to protect elite investors from competing against a lot of smaller investors for private equity placements. And I think that if we change the rule to have this scaling function in how much risk you could take based on income, you would see a lot more IPOs, a lot more ICOs getting funded with a lot more capital without having to put as much equity at risk as for sale to the public.
And giving buyers a lot more rights, legal rights over equity and company and all that.
And the price of that equity would rise because of increased demand. So you would have really a renaissance in capital markets, and you would have a whole lot more people in the country who would be gaining wealth through capital investment, and they don't need to be personally investing themselves in making the decisions, utilizing mutual funds and other pool systems like that to allow professionals to make their investment decisions for them. It's perfectly fine, but you want to be able to allow more people to participate in private equity markets and not leave it as a private rigged game for a small class of venture capitalists and their accredited investor clients.
Yeah, absolutely. That's a fascinating topic to explore. And I have to say, like, the SEC does seem to have acted in a very kind of cautious way. It doesn't seem like they are acting in a predatory manner, and it does look like they're going after scammy behavior. So, kudos to them for that. I think it's important to recognize that does seem to be some goodwill in them, even though we need to, I think, challenge some of the assumptions that have led to the current rules, right, and the current sort of laws, right?
A lot of people assume wrongly that the SEC is a government agency. It's not. They have, just like the ASPCA and the Humane Society have a government authority to go on your property and make sure your pets are being properly treated. The SEC has congressional authority it's an industry self-regulating organization. That's how it started.
Oh, shit.
And so, but it was delegated some enforcement capability by Congress. So people get confused and think that it's a government agency when it's not. And so really, if we have people acting in good faith, if the community creates a similar self-regulating organization, then it's going to be something where instead of having the SEC come down, if the SEC doesn't understand blockchain, if we have a blockchain commission of some form that's made up by people in the industry to create standards for ICOs, to create standards for smart contracts and all these sort of things, then Congress will say, you're doing a good job. Here's the imprimatur. You have the authority to do this across the entire marketplace. And so that way, anybody who wants to be in blockchain can participate in the regulatory process, can, vote on commissioners, can to nominate for appointment to the commission, things like that. So this is where, I kind of part ways with a lot of the more, I call the bunkertarian kind of faction of the liberty movement, that they don't want to be involved at all. They think that, I call it the Freddy Krueger fallacy, that if you don't believe in something, that it doesn't have power over you, and and so the fact is the government can hurt you, and a lot of libertarians don't believe in voting. I vote. I participate in creating legislation. I vote self-defensively, just like I carry a gun when I'm in a dark alley. In a dark election, I vote self-defensively. And that's as much, people say that there's 3 boxes in civil society. There's the ballot box, the jury box, and the bullet box. Okay? And those are really your 3 powers as a citizen to change your government. And the system isn't fully corrupted, and the only reason it's really corrupted is because people refuse to be involved. And we've really proven that with the Free State Project in New Hampshire, that you get enough liberty people who are dedicated to making change happen, to participating in the process, to ensuring transparency in the political process, and voting, getting elected, creating legislation, and you can actually change the course of events in your political system. So
politics is downstream from culture.
Yeah.
Yep. Andrew Breitbart said that, by the way. We're going to catch that. I think it's a really interesting premise, and it does seem to follow. Yeah. I mean, I've become perfectly fine with the idea of defensive voting. I think sometimes it's going to make sense to use this tool, and to refuse to use a particular power that you have in order to defend what you think is good it's a weak move that you're going to end up losing ground on.
The argument that voting is always an initiation of aggression is simply false. I mean, it's just like I like to poke fun at some of some libertarians who, for some reason, automatically assume any use of force is an aggression. And it's not. If I'm defending myself, I'm using force to defend myself. I'm not initiating an aggression. And the non-aggression principle only applies to initiations of aggression. So just like self-defense is valid use of force, self-defensive voting is valid use of the vote.
Right. Exactly. Yeah, there's a lot of new ones that I find kind of, I don't even know what to call them. It's like a particular branch of anarcho-capitalists. And it's a particularly ADD branch of ODD. Yeah.
Oppositional defiant disorder.
ODD and autistic sort of branch of the anarcho-capitalist movement that just, it seems like they can't see that the nuance in that, right? Like self-defense is a form of violence, but the only difference is sort of a kind of, cause and effect
right. You're justified because you've been aggressed against it. Right?
Yeah. And then there's like this whole spectrum of ethics within fraud that I don't see any sort of anarchist philosopher discussing at depth, except the people that are in the crypto market thinking about ICOs and being like, shit, there's a lot of scams going on, right?
And this is actually really healthy for libertarianism in general, is to have this debate because of cryptocurrency is to what is fraud. Is fraud a initiation of aggression? Yes. And, it's misrepresentation, it's theft, it's, all kinds of wrongdoing. And so therefore we're starting to have this sort of conversation in the liberty community and saying, these sort of behaviors, even though there's, aren't guns involved, people aren't dying or being injured physically, they're being injured monetarily. If we agree as libertarians that the basis of our rights in nature is based on our self-ownership, and that all rights are property rights, then if it doesn't matter whether it's my property right to a vote or property right to my home or property right to my person, any such aggression violating any right is a violation of my property rights, and therefore is a tortious aggression that should be opposed by libertarians.
Mm-hmm. Yeah, and I hope that this serves as an invitation to libertarian academics and philosophers to come in and really enter the space and try to help develop this sort of legal theory, or at least sort of consensus legal theory, or whatever we're going to call it. Because I don't see them, I don't hear them. So if you find this interesting, share it with them. Go share it in their forums. Go tell them about it. Because it's clearly like an important issue in the market, right? And if we don't find the proper solution to it, and as a self-regulating sort of community, then the SEC is going to come in and have to make some decisions, right?
If you don't just the whole basis of government is because people are not responsible. Mm-hmm. If you're not regulating your own behavior, that's irresponsibility. And government's mantra is that people are no good and they need to be told what to do, and because they're not responsible. Mm-hmm. If you don't want government in your life, the best way to get government out of your life is to be responsible for yourself. Absolutely. And that's where you get the rubber meets the road between regulation of self-regulation and government regulation. So if you don't want Uncle Sugar in your life, if you don't want the welfare state, if you don't want the tyrant in your life, then you need to be responsible for your behavior and how you deal with other people, how you treat other people, and how you behave in your contractual relations. And that's really the basis of libertarianism there.
Mm-hmm. Yeah, and do it consistently and spread it to your community, and work to make that grow at a scale where governments will have to sort of recognize that they're in the bad.
It's like the wrong. Difference,
because governments are made of people, right?
Yeah.
If people can't justify to themselves, right? Yeah, there's sociopaths in every group, but they're a very small part of it. Yeah. Right? If people identify the sociopaths, and if people can't justify their own behavior against other people, then that behavior won't happen. Right. And that's how the de-escalation.
And statists always try to justify what they're doing by pointing at the bad actors. But the fact is that you've got bad actors, anarchists, and you got bad actor statists, and really, with one can't survive without the other, justifying each other's existence.
Brilliant. Yeah, from like a pure strategy perspective, it makes sense that there's an alignment between the two sort of.
Yeah.
The negative actors on both sides.
You're not the boss of me. There's a difference between chaos and anarchy, and the state loves to always equate the two to give anarchy a bad name. Mm-hmm. But the fact is that and this is where you get between libertarianism and libertinism. Is that being free to do anything doesn't mean you should do anything. Mm-hmm. Mm-hmm. That's the difference. Just because it's an anarchy doesn't mean you need to make it a chaotic system.
Mm-hmm. Yeah. That's fascinating. That's fascinating. So for anarchy, like the ideal of the anarchist society or the anarcho-capitalist society to emerge, people need to become conscious enough and responsible enough over themselves and their family and their environment, so that they can bring order from the chaos from the individual instead of having to deal with an imposition.
Spontaneous order is an emergent property of a voluntary society, and that's
there's a kind of spiritual or cultural sort of responsibility and ethic that people
and
function on there.
We had a similar discussion on Free Talk Live last week, where from a religious perspective, people talk about you need the church to be the state to tell people what to do, and it's like, no, the idea of a religious relationship with a higher power is that you're trying to live a virtuous life, and by doing so, you're whether it's earning a place in heaven or just having a better life, a happier life, more at peace with people. It doesn't really matter what the end goal is, but that the state telling you how to behave actually prevents a virtuous society, because if you don't have the freedom to choose to act virtuously, then you're being prevented from living virtuously, because being told what to do isn't a credit to you, because you're not the one that made that decision. The state made the decision to tell you what to do. So you have no gain. You didn't earn anything by behaving. But if you are free to choose to behave that way, to in a voluntary society, to comply with accepted standards of a moral system, of an ethical system, then you're going to be seen as virtuous by others. You'll be seen as a fair actor by others. More people will want to deal with you, and you'll benefit personally from that. And whether you have a spiritual component of an idea of a reward in hereafter or whatever, that's great too.
And the courage, like there's in civil disobedience against sort of this sort of more totalitarian or authoritarian rulings, there's sort of the courage emerges, and from that there's heroism, right? You're bringing virtue into existence through civil disobedience, right? And that's definitely a very honorable thing.
And not by avoiding consequences. If you're going to be being a civil disobedient protester, you have to accept the consequences that the state may impose on you. You can't try to escape. Okay, hiding out in the jungle or escaping to another country. You're not earning virtue by doing that. And you're not helping your cause as much as you could by standing up to the power and, like the Christians in the amphitheater being torn apart by the lions, you're not showing the people, your tormentors, how wrong they are by forcing them to do their worst to you. Okay? If you're escaping it, you're not teaching them that lesson.
Yeah. I mean, that's a really good argument, and I think it's a difficult one to deal with. I mean, to some degree, like I have some friends that were simply, they escaped the United States at a given time for fear out of, the certain things that the government would impose on their children.
Right.
And so there's certain lines that I can respect and say, okay, well, fuck, that's a difficult choice, but I can certainly see the courage in staying and fighting and sort of pushing back.
Right, and when you've got kids involved, you've actually got to make you. People often say the societies practice the morals they can afford, and when you're having a family, you can't just think about the risk to your own person. You have to think about it to your spouse and your kids and so forth. So that's can be a moral hazard you have to really walk through, and so people can't afford to take that sort of moral stand if they have these other obligations to other people. So it's it is a difficult choice to make.
Right on. All right, we're almost at 3 hours. Is there anything else you want to talk about?
No, not really. This has been a great show and great to chat with you about this. But a great time to have you here, and I hope we do more hangouts in the future and different events around the world.
Absolutely. I think it was a fascinating conversation. Let us know what you guys think in the comments below. Share it. Tell everybody you like it. And thank you for having me here. It's been a great time in New York, and looking forward to doing more.
Thanks for coming up.
More podcasts and shows and stuff. Cool. Also, check out his tie. It's hilarious. This is what a lot of the crypto noobs are experiencing in this big crash.
Ooh, roller coaster. Oh, no. This is actually a tie I wear to all the weddings in my family. So
they're like...
Oh, no. And this is like, there's only been one wedding in my family that I've worn this to that hasn't ended in divorce. So this is sort of the jinx tie. So everybody's like, you're not wearing that to my wedding. And I'm like, okay.
The jinx tie. That's really funny. Well, I hope more people stop getting divorced. Divorce is a bad thing. Have some grit, for fuck's sakes. Or don't marry. I don't know. People you might
marry
divorce.
More people. Polytheistic or
marriages. So.
All right, we'll have to leave that discussion for another time. Take care, guys.